tailored as possible and focus on centralized exchanges. So that's going to be a priority for us. Gary Gensler at the SEC has obviously expressed a tremendous amount of interest in this space. I think there are some ways that he could propose some changes to regulation that would make it easier for companies to register, but that has to be done in a very precise way. And so watching and continuing to work with the SEC, I think, is going to be important. The stablecoin front, stablecoins have gotten a lot of attention lately, but I'm not convinced that we're going to see any quick action. A lot of what the President's Working Group report did was ask Congress for more authority. And, we're heading into an election here in Washington. There are some must-pass bills like the Continuing Resolution, the National Defense Authorization Act. But outside of that, I don't think we're going to see a lot of moving legislative activity. So I think a lot of it is going to be working with regulators, but really continuing to do that basic education that's needed so that policymakers can actually make informed decisions going forward.
Mm-hmm. Finally, Kristin, Saleh Omarova, who was nominated by President Joe Biden to become the next Office of the Comptroller of the Currency, head the Office of the Comptroller of the Currency. Do you see that? I'd like you to weigh in on that, because she has said some negative things on cryptocurrencies, and do you see her nomination going through?
I don't see her nomination going forward, which actually is of great comfort to me. I don't think she would have been good for crypto. I think she could have potentially undone some of the good work that we saw, in the previous administration on this front. And so I think there's somewhere between 3 and 5 Democrats who have expressed reservations. It wouldn't surprise me if we see the White House maybe pull that nomination, maybe put a new name forward. But I don't see her moving forward. I think, it's interesting to me when I was home over Thanksgiving, my brother and my parents were asking about Omarova. And that's something that has hit mainstream news. I think it's something, that people don't normally go around asking about, bank regulators. But I think when your everyday person is out there sort of being like, hey, this seems a little bit extreme to me, I don't think that's somebody that's going to make it through the floor of the United States Senate. So I don't expect that to go through.
Mm-hmm. Nonetheless, wouldn't she have been great for crypto, though? Because basically, if she was trying to destroy the banking industry and wreck the currency, I mean, wouldn't that be fantastic for crypto?
I don't think we're quite there yet.
Promoting her?
No, I think she might have also tried to take out crypto in that as well. But no, listen, I think the banking system still has a role to play. I think there's a lot of lending in a traditional way is still going to have a major role to play in our economy going forward. And I don't think we're ready to see banking as we know it end today. So
maybe Kristin's just aligned with the banks on this one. All right.
I'm secretly a mole. That's the plan.
Yeah.
All right. Congratulations, Kristin, on the raise. Appreciate you coming on the show.
Thank you
for your insights. That was Kristin Smith of the Blockchain Association joining us as part of CoinDesk's Future of Money Week. All week long, CoinDesk and CDTV will feature thought leaders who share their opinions on the future of money and the emerging crypto economy. You won't want to miss a special edition of All About Bitcoin today at 3 p.m. as well, when MicroStrategy's Michael Saylor will be joining us. All right, coming up, checking out on Asia and a crypto markets update with WisdomTree. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, November 30th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, after much debate, Korea's National Assembly has finally agreed to postpone the imposition of a tax on crypto gains. We're going to take a look at how big a deal that is for investors in the country and a whole lot more coming up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories coming out of Asia today. First up, one of South Korea's largest banks is getting ready to invite clients into their virtual branch in the metaverse. KB Kookmin Bank says its KB Metaverse VR branch testbed will allow customers to experiment with getting their banking errands done in a metaverse branch using a virtual reality headset. Simple transactions like doing remittances can be undertaken at the personal window, while an employee avatar at the VIP lounge can help analyze risk return profiles or even design an investment portfolio. Meanwhile, if you're looking to borrow a cool $100 million to buy some crypto, Huobi Lending says they're open for business. Launched by Hong Kong-listed Huobi Tech, the platform allows institutions and high net worth individuals to use their existing crypto assets as collateral to buy other digital currencies. You can find those stories and a whole lot more at FORKAST.news. Meanwhile, interesting developments out of Korea that no doubt other democracies may be paying attention to. A victory for those who pushed to delay the crypto gains tax. Now, the ruling and opposing political parties of the country have officially agreed to postpone the start date for the new tax from 2022 to 2023. What does it mean for the country? FORKAST News' Danny Park has more.
The tax plan's initial announcement earlier this year was met by a severe backlash, with investors further angered by remarks from the financial regulator at the time, saying the younger generation was headed the wrong way by investing in cryptocurrencies. The resulting online petition gained the 200,000 signatures required for the government to be obliged to respond after just 25 of the allowed 30 days. Investors in their 20s and 30s continued to voice their disapproval by submitting more petitions, leading to several lawmakers proposing a delay in implementing the tax. Local media has suggested those calls were an attempt to secure the votes of younger investors for next year's presidential election. However, while the delay in implementation was approved at the National Assembly meeting, an amendment to the tax threshold was not. Lawmaker No Eun-rae of the Democratic Party, who proposed the delay bill, says he will continue pushing on the tax threshold now there's one more year. One expert told FORKAST News that while this is a good start, there are many more issues surrounding the crypto tax that need to be ironed out, including transactions that authorities are currently unable to track.
만약에 가상자산 거래소에서 거래되지 않고 이게 삐져나가가지고 P2P 거래로 다 도망가는 이런 거래들은 어떻게 잡을 수 있는가 하는 문제인데 아직까지 거기에 대한 준비가 안 돼 있단 말이죠, 가세관청이.
As other countries look to establish their own crypto tax legislation, this is one example of what can happen when investors push back. For FORKAST News, I'm Danny Park.
Meanwhile, over in India, the country's first crypto unicorn is looking to launch an IPO, but it's not entirely up to them, per se. In an interview with Bloomberg, CoinDesk co-founder Niraj Khandelwal says the company would do so as soon as legislation permits. However, with India's crypto bill still to be discussed in Parliament, a precise timeline for an IPO is kind of unclear right now. FORKAST News' Monica Ghosh has more from Pune, India.
Khandelwal was optimistic over the proposed legislation, saying it will provide clarity for companies such as CoinDesk as well as investors. He went on to say that an IPO gives legitimacy to the industry, much like the Coinbase IPO earlier this year helped boost investor confidence. However, shortly after the interview, CoinDesk clarified in a statement to local media that while the company is exploring an IPO as an avenue for growth, like many startups would, there is no definitive route or clause as to when it will go public, and there are no immediate plans for the IPO. For FORKAST News, I'm Monica Ghosh, Pune, India.
And that's the daily forecast from our vantage point right here in Asia. For more, visit FORKAST.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by GRAYSCALE, the world's largest digital currency asset manager.
All right, let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is trading at $58,473. Bitcoin is up over 2% over the past 24 hours. The CoinDesk Ether price, ETX index, is at $4,675. ETH is climbing ahead over 7.5% right now. Taking a look at the DFX, CoinDesk's DeFi index, trading at 551 points, advancing over 4% for the day. Joining us now to discuss the crypto markets is Jason Guthrie, Europe head of digital assets at WisdomTree. Welcome to the show, Jason. Thanks for coming on. All right, so we're seeing a crypto markets bounce after a sell-off over the weekend. What's going on?
I think just the sell-off came on the back of very little. We had a bit of we came off a recent high. We had a lot of leverage in the market, which seems to have been flushed out a bit. And we had a bit of a sell-off in the equities market as a result of the recent news on Corona updates. But it seems to not really be taking hold, and we're getting a bounce accordingly.
Hi, Jason. Just to follow up on that. So one of the things that we saw last week was that, Bitcoin kind of crashed with the equities markets, like basically in response to COVID. At least that's the narrative. So that implies that Bitcoin is not really being seen as a safe haven. Would you agree with that assessment? And do you think we're going to keep seeing that going forward? Because, these COVID fears aren't going away anytime soon.
I would say that not everyone thinks about any asset in exactly the same way, right? So if something is going to sell off, it means there's more sellers than buyers on a given day. And I think when people are panicked, that they run back to their base. For a lot of people, their base is still their fiat currency, and they've come to crypto for speculative purposes. And so when people see negative news they think is going to lead to panic in the market, it becomes a bit of a self-fulfilling prophecy. We've seen this across markets, across timescales. We saw this in 2020 for the initial kind of COVID announcement. We've seen it through any kind of the currency hiccups that we've had over the last decade. But that doesn't mean that the fundamental value proposition or the idea that Bitcoin is or could become or is to some people a store of value is undermined by the fact that it's sold off in line with equity markets.
So, Jason, we saw we're seeing now a bounce not just in Bitcoin and ETH, but we're also seeing it in the alts. Do you think that the alts will outperform the majors, Bitcoin and ETH, over the next few weeks going into New Year's?
I try to avoid talking about short-term price moves. I think that the market volatility is going to be affected by any kind of number of factors. I do think all things being equal, we are seeing more volatility, therefore, in the alts, and therefore they're likely to outperform in an upward market and they're likely to underperform in a downward market. I don't think that trend is going anywhere anytime soon. So let's see how the market goes over the next kind of coming months. But I think the idea that we'd see more volatility, more price action in the alts is to be expected.
So, Jason, WisdomTree is also launching a trio of cryptocurrency basket electronic traded products. Tell us what these ETPs will be composed of, and tell us a bit about, we're seeing a lot of Bitcoin ETFs, Bitcoin futures related spot ETFs. So what's the demand for this?
I think the demand that we're seeing for market access tools is only going to grow over time. It's definitely been growing over the past 12 or 18 months that we've been sort of actively engaged in this space. And that's a trend that we see continuing. I think sort of what has changed more recently is the narrative around where exactly in the market investors want to put their money to work. Historically, it's been very, very focused on the sort of very mega cap end of the market, Bitcoin and Ethereum, but it's definitely widening out from there. I think the narrative that's evolved this year is that of the alternative layer ones or Ethereum alternatives. And this idea that the technology isn't a winner takes all, but a multi-chain future is definitely possible. This idea of interoperability is weaving its way through how people are thinking about the ecosystem that might evolve. And as a result, people are looking to take exposure over a wider range of coins, of tokens. And that's something that we're actively looking to provide tools for.
All right, Jason, thanks for joining us. Appreciate your insights. That was WisdomTree Head of Digital Assets Europe, Jason Guthrie. Coming up, we'll talk about stablecoins, how central banks and major banks are jumping into them with Hedera, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick, who's in the studio. So we hear a lot about Bitcoin-related ETFs, but now investment firms seem to be diving into Ether ETFs. Tell us the latest.
Good morning. Yes. So the Kelly investment firm run by Kevin Kelly filed for a Ether futures exchange traded fund yesterday, which is the first move after several Bitcoin futures ETFs were approved for launch by the SEC earlier this year. But the SEC also required, or asked at least, several of these same issuers to withdraw their own Ether futures ETF applications. So what Kelly is doing here is trying to launch a product, or at least applying for a product that the SEC has already more or less explicitly said it's not interested in right now. And the question is, has anything changed, or is this, an effort to, move this conversation along?
Yeah, why go through the hassle of that? That's exactly what I was going to ask you just now. Why go through the hassle of all this if the SEC has already said, yeah, no?
It's very possible that the SEC just wanted to get the Bitcoin products out first, because Bitcoin has been, regulated and has fallen under the SEC's jurisdiction. Bitcoin has been regulated as a investment in the U.S. for a lot longer than Ether has, and it's only been recently that we've seen some of these Ether futures products to begin with launch. The first one came out last year, so. It's very possible the SEC was just waiting to get the Bitcoin product out so that they could say, hey, we have this, and here's how it works, and here's how it looks like, and here's what we have to do to look at this. And now maybe they can focus their attention on Ether futures. Or it's very possible that, Kelly here is just trying to see, take the SEC's temperature on if anything has changed in the last 3 or 4 months.
Yeah, get the filing out there, see what happens. Thank you, Nick, for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, let's talk about stablecoins. A major South Korean bank, Shihan Bank, and South Africa-based Standard Bank will issue stablecoins backed by their local currencies using the Hedera network to facilitate money transfers across the world. With this stablecoin solution, high transaction fees and hidden costs borne by customers have the potential to be significantly reduced. Joining us now to discuss is Mance Harmon, CEO of Hedera. Hello there, Matt. So international remittances amounted to over $700 billion last year, most of which you've said was sent to low to middle income countries. Fees are up to $80 on top of regular cross-border transfer fees. So just how much can this stablecoin solution using Hedera save folks? And how do you see people moving away from fiat and to a stablecoin solution and become more comfortable with that digital technology?
Yeah, well, look, the difference in the cost to the users is enormous. The typical cost for wire transfer can be anywhere from $25 to $80, typically maybe $40 or $50 on average. The cost to do a single transfer using Hedera between the two banks is literally 10 cents in USD. So 10 cents, that's the difference. And instead of it taking days for that to settle or complete, it happens within seconds. And there are tracking mechanisms or audit mechanisms that allow you to know exactly what's happening when it happens, all in real time. So the advantages are just enormous. And, this is the future, obviously, and everyone will continue to get used to using crypto, and we'll move to a digital world.
So Tether had launched a Euro-backed stablecoin, and it doesn't seem to be doing as well as the USDT by any means. So what is the case in this? What's the actual use for a stablecoin that's won or rand backed? I mean, where's the demand for it? What are you doing that's different?
When we talk about the stablecoin versus perhaps, say, CBDC, the CBDCs will ultimately be issued by the central banks, but then they will be easily transferable for the stable coins that are issued by the local banks or the retail banks. There are multiple ways that this may unfold, and it still remains to be seen whether stable coins that get issued by, like a Tether, versus stable coins that get issued by each bank individually and just issued in their local currency and then get traded with banks on a global scale with further settlement on a regular basis plays out. So I think it's still very early days and hard to predict exactly what will happen in the market and how the use of CBDCs and that's complementary
but does
or
this
conjunction with
provide
stablecoins.
something of a benefit more than, say, to Tether? This stablecoin solution is what would the difference be? Does this provide some sort of additional benefit, or how do you see people wanting to use this more?
So I think what's happening in our case is that the banks are wanting to understand how to use stablecoins, how to issue stablecoins, explore what are the pros and cons, the advantages and the disadvantages of stablecoins. And in the case of Shihan and Standard Bank, they decided to explore in this initial POC the use of stablecoins for international remittances. I think it's still early days again, and the banks are learning through this process and understanding what the value prop is relative to other stablecoins in the market.
What are they going to back these stablecoins with? I mean, obviously, it's slightly different because they're going to be bank-issued stablecoins. But what essentially what's going to be on the asset side of that ledger?
In the case in this case, they are exploring using fiat. So whether it's the yuan or the rand, they would have the liquidity there, obviously, in the banks to issue the stable coins. It would be backed by the fiat. And again, if it were in conjunction with the CBDC, then it would be as easy as transferring a central bank digital currency for trading a central bank digital currency for one of the stable coins. So, but in this case, it's fiat.
And is there any concern about regulations? We're seeing from the president's working group in DC, in the U.S. that they kind of want Congress to take some more action. Do you have any concern, or do these banks have any concern that their local governments might take an action when it comes to stable coins to deal with any potential, let's say, printing, if you will?
Yeah, well, I don't want to speak for the banks, and they certainly understand their regulatory environment better than I do for their jurisdictions. But what I can say is that these banks are not in the United States. They're not governed by the SEC, and they're exploring use cases that don't include the United States. So, there are a lot of different Sorry?
They're local country. They're local governments, though. I mean, is there any concern about their local governments?
Yeah. So again, I don't want to speak to their concern or non-concern for their local regulatory regimes, or if they have concerns. I would just defer to them on that.
Stablecoin regulation is going to be a hot topic going into the new year. And we already see India proposing this bill to move forward with a CBDC, a central bank digital currency, and at the expense of banning private cryptocurrencies. Do you see that having an effect on this stablecoin solution?
No, I don't. I think that India is interesting in that they kind of are an outlier in terms of the ways that they're thinking about regulating and dealing with the crypto market. It's a big world, and there's a lot of value in using stable coins for international remittances alone. There are other use cases for stable coins that the banks are exploring as well. And it'll be interesting to see if what India does might cause others to consider doing the same, but that's not what we're seeing so far. I mean, again, the Indian government seems to be sort of an outlier in its approach to crypto.
Yeah, I could say that perhaps China is doing something similar, as well as Nigeria, in terms of banning private
China
in favor of their own central bank digital currency. So we'll see what happens going forward. Mance, thanks for joining us, and congratulations on these new partnerships and developments. That was Mance Harmon, CEO of Hedera. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. Coming up at 10 a.m. is our special live stream of Treasury Secretary Janet Yellen and Federal Reserve Chairman Jerome Powell's hearing before the Senate Banking Committee. Stay tuned. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin, live with Michael Saylor. You're watching CoinDesk TV.